Welcome to the Beginner's Guide to the Stock Market. If you've ever felt confused or overwhelmed by words like stocks, shares, or dividends, don't worry. In this video, I'll explain everything step by step in simple language. No jargon, no confusion, just clear and true information to help you get started with confidence. Let's begin. What is the stock market? The stock market is a place where people buy and sell shares of companies. A share is a small piece of a company. When you buy a share, you become a partial owner of that company. Ever wonder why companies list their shares on stock exchanges like the NYSE, NASDAQ, or India's NSE and BSE? Well, when people mention the stock market, they're talking about the system where these shares are traded. So why do companies sell shares? Good question. Companies sell shares to raise money, a process known as going public or launching an IPO. When you buy those shares, the company gets funds to grow, and you get part ownership and a chance to earn profits if they succeed. Why do people invest in the stock market? Three main reasons: to grow wealth, earn dividends, and beat inflation. First, growing wealth. Stock prices can rise over time, increasing your investment. Second, earning dividends. Some companies pay profits to shareholders regularly. Third, beating inflation. Stock returns often outpace inflation, preserving value. What makes stock prices go up and down? They change based on company performance and market conditions. Investing is about making informed choices and understanding risks. Ready to start your investment journey? In today's fast-paced world, staying updated with industry news is crucial. Government policies can shift the market landscape overnight. Global events ripple through economies, affecting stock prices. Investor behavior driven by supply and demand is ever-changing. For instance, a new product launch can boost a company's stock, while losses can cause a dip. The stock market is a real-time reflection of business confidence. To start investing, you need a PAN card, a bank account, a DMOT account, and a trading account. Open these accounts with brokers like Zerodha, Grow, or Upstocks in minutes. Stay informed, invest wisely, and watch your wealth grow. Let's break down a few common types of stocks you might consider. First, blue chip stocks. Shares of large established companies. They're usually safer. Next, growth stocks. Companies expected to grow rapidly, but they might not pay dividends. Then, dividend stocks. These pay out part of their profits regularly to investors. And penny stocks. Very low-priced shares with high risk and high potential reward, but not beginner-friendly. When choosing which stock to buy, don't just follow advice blindly. Do your research, and here's what to look at. Ever wonder if your company is actually making money? Let's break it down. First, check those profits and revenue. Are they climbing or just flatlining? Next, debt levels. Too much debt? That's a red flag. Look at industry trends. Is your sector booming or busting? Valuation ratios matter. A sky-high PE ratio might mean overpriced stock. Use Yahoo Finance, Money Control, or TradingView to get the scoop. And remember, long-term investing lets compounding work its magic. So, are you in it for the long haul or just a quick win? Ever wonder if a company is really making money? Let's break it down. First, check the profits and revenue. Is the company actually profitable? Next, look at debt levels. Too much debt can be a red flag. Then, consider industry trends. Is the sector growing or declining? Don't forget valuation ratios. A high PE ratio might mean the stock's overpriced. Use sites like Yahoo Finance or TradingView to get this data. Finally, think about your investment strategy. Long-term or short-term? Long-term investing lets compounding work for you with less risk. Short-term trading is like a roller coaster, buying and selling stocks within days or weeks. It's risky and demands sharp technical analysis skills. For beginners, long-term investing is safer and more effective. Mutual funds and ETFs are your friends if picking stocks isn't your thing. Mutual funds have a manager to handle stocks for you. ETFs trade like stocks but offer diversification like mutual funds. Great for beginners who want a hands-off approach. Start investing with just Rs 500 or $10 per month. Invest smart, stay safe, and let your money grow. How much money do you need to start investing? Not much. With apps like Grow or Zerodha, you can start with as little as Rs 100 or $5. The key is not how much you start with, but that you start. Even small, consistent investments add up over time. Common mistakes beginners make: following the crowd. Just because everyone is buying a stock doesn't mean it's good. Checking stock prices constantly creates anxiety. Long-term investors don't need to watch daily. Trying to time the market? No one can predict it perfectly. Putting all your money in one stock? Always diversify. Ignoring fees and taxes? Always check brokerage and transaction fees.